So, as we approach CDR's first birthday, it's time to discuss what's next for all ecosystem participants. Andy Parton and Mike Booth from EY will bring key perspectives on where we are now and what's happening in the ecosystem and the lessons learned, the challenges and opportunities. Looking to the future as they explore the rise of the ADR, which is accredited data recipients, asking what will be needed to compete, and as CDR moves beyond banking, explore the partnering and ecosystem business models and potential cost industry use cases. So please welcome Andy Parton and Mike Booth from Ernst & Young. Come on, come and take a seat. Come and have a chat. You're going to sit down? You're going to stand up? You're going to stand. All right, I'll get off and you can stand, Andy.
Thanks. Do we need a mic if I'm walking around?
I'll leave that. Oh, you can. Yep.
Thank you. All right. Can you hear me okay? Morning, everyone. Thanks for staying and listening to us. I know there's a few other sessions on at the moment. My name is Andy Parton. I'm a partner in our technology consulting practice. This might be a bit of a different presentation than you thought if you thought EY was just an accounting firm. I was chatting to somebody over coffee who said, what do you guys do in fintech? So we do consulting. My colleague here, Mike Booth, and I have been in and around open banking for some time, Mike longer than myself, both as advisors and practitioners with the regulator, the banks and fintech. So we'd like to think we've got a reasonably broad and reasonably deep view of what's going on, and that's what we'll try and take you through in the next 30 minutes or so. So I'll kick off a bit of a level set. There'll be different people in the room who've got different understandings and different perspectives on CDR, so I'll try and give a level set of where we are, some of the challenges and some of the things we've learned. We'll then switch over to Mike, who will talk about what this is really all about, which is delivering value to consumers and as the participants in that ecosystem competing. Mike also has the enviable task of trying to look through the crystal ball and seeing where this might go in the future. So I'll just go through some sort of facts and figures. Most of you are probably familiar with this. 5 data holders in the ecosystem. There are 10 data recipients. 6 of those are active on the register. So we've got the foundation of the ecosystem in place. There is real consumer data exchange occurring. It's proven that's a really great foundation. Contrast that 12 months in the UK, where 7 of the 9 major banks, frankly, were still in some form of a major remediation program, trying to get themselves to a point of compliance 12 months after the go-live date. So, there is a perception that we're moving slowly. I think that's a bit of an unfair criticism. This isn't something you can just flick a switch and turn on overnight. And on the next slide, I'll talk through some of the challenges to hopefully bring that to life. But I think we've got a great foundation. Look at what's coming next. The next major milestone, 1 July, that brings the remaining ADIs in, and they are then obligated to begin sharing consumer data in the same way that the big 4 banks are already and have been for 12 months. There'll be some that don't quite make the date, and again, I'll talk about some of the challenges later, but I'm confident over the next 6 to 12 months that we'll have pretty much all of the banks in the ecosystem able to share data, and that's a huge opportunity that creates. According to the AFR, back in November of last year, at that time, there was estimated to be about 40 data recipients in the process of accreditation to coming into the ecosystem, and another 100 or so in discussions. So again, Mike's going to wind forward a bit more in the future. Within a year's time, we expect to see a much bigger and more vibrant ecosystem. It continues to be a focus for the government. Mike and I were working with the regulator in the run-up to the July 2020 go-live date when COVID hit. Frankly, we didn't really know what was going to happen. Other regulatory bodies, like APRA and such, were slowing down some of their programs to take account of that. The government took actually quite the contrary view and said they see CDR as a key tool to help the economy recover post-COVID, and so kept the pressure on. And you see there, and you would have heard Senator Hume yesterday talk about $100 million odd just been announced in the federal budget to accelerate CDR. So, all good signs of momentum. There's some change coming, some functional change coming in through the rules in the form of joint accounts. It's actually quite a significant change. We've done our own analysis on that in terms of our own open banking solution, there's quite a bit of a build for that. So many organizations are looking to how they implement that. Obviously, other industries will come in, which drives change, but drives a huge amount of opportunity, as does the action initiation thinking outlined in the Farrell report. Payments is probably key. I think the working group is actually behind that, that wall right now, talking about payments initiation for Australia. Hands up who was in Brenton Chandler's session yesterday on TrueLayer and payments and open banking, a couple. If that wasn't compelling enough as to the value and take-up of payments within open banking, then I don't know what was. Having said that, I was in a crypto session just afterwards which said blockchain and crypto is going to eat open banking payments lunch, so we'll see. Anyway, so that's a bit of a level set. It is, you know, going back to the point about are we moving too slowly, this is a complex undertaking. When you pull together the obligations across the Treasury rules, the data standards, CX standards, the OAIC stuff, there's about 700 different obligations that organizations or ADIs to become compliant, or ADRs to be compliant, need to understand. That requires a fairly significant complex program of work to implement. And it's not set or forget. So there will be changes over time as new functionality comes in, action initiation, as rule changes. So you know, that requires a reasonably significant capability to assess and understand and implement any changes as they go. And really, you know, compliance is, you know, if you're an ADI, it's mandatory. If you're an ADI, you've got to be compliant with certain regs and standards as well. That's just table stakes. You've got to get that in before you can then think about what are your use cases, what are the capabilities you need to drive those use cases, and what does that whole strategy look like. So Mike will spend some time on that. And obviously, all of this needs specialist skills, which are not easy to find. You know, there are some clear do's and don'ts, and some of this might sound a bit obvious and a bit basic. You know, starting with a strategy and a plan, and beginning with the end in mind. Again, it sounds pretty obvious, but we've seen many organizations that haven't taken that approach. You know, if you think about the steps around compliance, the first thing you need to do is be able to share your product reference data. That's relatively simple. And so many organizations have said, okay, well, that's the first thing we've got to do. Let's go and build some tech that exposes our product reference data. Okay, fine. Some organizations managed that. Some actually found that harder than they'd expected. The next thing is, okay, well, now I've got to start to share my consumer data. So I've got to expose all of my core bank customer product data and do that in a way that is fairly prescriptive through the rules and the standards. That is a whole nother level of complexity, which is what the tier 2 banks are facing now for 1 July. And many of them, frankly, are struggling to do that. And even if you get that right, you've then got November, then you've got February, you've got the changing rules. So it's an ongoing piece. And like I said, all that does is get you compliance. That doesn't get you the ability to innovate and think about use cases and design and build and run capabilities to deliver those use cases. You know, our strong recommendation would be don't go building your own compliance tech. There's just no need to do it. What you should be doing is focusing your efforts on what's unique to you and how do you compete in the market. You know, that said, what does that mean in terms of, you know, the various different constituents in the ecosystem? So the big 4 banks, they're now live. They have been for a year or so. They've got a little bit more work to do as those changes, some changes come in over the next few months. They're all now turning their attention to how do I compete? What's my strategy? What are my use cases? What are my capabilities? They're obviously all at slightly different stages. Some of them probably not as advanced in that as you might think. The non-big 4 banks, as I said, are running flat out for 1 July go-live dates and then the ones after that. A few of them are starting to think about how do they compete, but most of them are really just focused on how do I get to be compliant. You know, so if you're a fintech, you might think there's a high barrier to entry. I don't, you know, there's work to do. There's compliant tech that you need. It's not that difficult to get hold of. You know, the room for fintechs, it would be wrong of me to advise you on the strategy in terms of thinking about your customer and what problems you're solving. I guess what I would say, though, is you know, most of these 100 or so banks are, if they're not now, will very soon be turning their minds to how do they compete in this environment, and they absolutely will not be able to do that using, you know, only their own tech and their own capabilities. So, you know, putting yourselves in the shoes of a bank, what is it? What's that bank strategy? What are the bank strategies? How can you provide capability, services, products that those banks can use to help them compete? If you can get that right, I think that's going to be pretty lucrative. I will hand to you, Mike.
Thank you. So what do you hear then? CDR's a cost. I can't see any valuable use cases from CDR. Looking at it going, anyone believe that statement? Well, a bank executive said those very words to us earlier this year. So it's kind of interesting. It's been around. It's even been through regulations. There's programs of work going on, and there are still key players in the market that are thinking, have these thoughts. But in there is an opportunity. If you have a different view and you say CDR, yes, there's a cost to achieve it, but actually there's a bunch of use cases, there's valuable propositions that you can offer, then in there is opportunity. If you have a partner with a bank executive that had that thought, then that's a partnership opportunity. And then in turn gets to new markets, either for you or for the partner. So what sort of things could you be looking at? I'm going to take a slightly further. We've had quite a few conversations in the conference, sort of looking at the near term and some of the practical things. I'm going to take a slightly longer term view around that. So I'm just going to canter through a few different examples. So strategically, okay, so let's take a world in the not too distant future where we've got banking data and energy data. Has anyone done anything in the energy industry? Any energy trading, anything like that? Okay, so if you've got a solar panel on your roof and a intelligent meter in your house, you are an energy generator. And you can sell that back to the grid. But at the moment, not in real time, nor as a fintech can you offer effectively an energy spread trading app. But there is potential that in a world of CDR that is cross-industry, that there are opportunities in that space. So that then gets you to what are the, some new products or services. So, embedded finance, again, we've heard a bit about that. What does that mean from a CDR perspective? So you're on car sales. It's automatically selecting cars that you can afford. You can go through the process. It will identify the best way for you to buy. And maybe at the end of that, give you it in for affordable monthly payments. Right? All entirely possible. So you get to this world where there's this personalization, detection of events. Any transaction that you have in one account can be a lead indicator into another account, so and target those offers. To the extent that from a customer experience perspective, that it can look at your cash flow, free available funds, find a savings account, and effectively sweep that liquidity and that money that you have in your account into a higher interest-bearing account. And that's actually happening in the UK. Take that to its natural extreme, where you've got telco and energy, and actually, do you ultimately end up with an ecosystem that is making these transactions for you, where you select your investment criteria and say, actually, I just want the cheapest one, and I'll take a bit of a trade-off on the performance or the service, or vice versa, and then it's going to go and run the algos underneath that, and then with action initiation, make it happen. Okay, so it sounds a little bit far-fetched, but you don't need a massive amount of imagination to come up with some of those sorts of use cases. And ultimately, why would anyone ever be doing this? You're doing it because there's an opportunity. So there's new markets, you're creating new markets, there's new data, there's new flow, so you can go, ultimately, where there's an opportunity, there's a business to be had. And then ultimately, that because it's net new, then it's differentiated, so therefore it's likely to attract customers. And if you're getting a customer outcome, saving them money, as an example, then again, that attracts customers. And ultimately, if you take an example where, if you're switching, where a lot of that customer data is already available from your banking data, KYC is reduced, forms are pre-completed, you've got very little to do beyond that. Obviously, the data quality's got to be there, but leave that to one side. That problem will self-right. So from a fintech perspective, then there's an interesting thing. So where do you play now or in the future around that? So do you provide very specific targeted APIs into that space? Do you provide the underlying infrastructure that enables that? And there's differing levels of the infrastructure. Are you the distributor of somebody else's product, which is more of the sort of banking as a service model? But if you take that up a level to cross-ecosystem, there's a multitude of different ways that you can do that. Or do you actually just engineer component parts into that ecosystem? Huge amount of really interesting, exciting opportunities in there. I'll quickly touch on a couple of examples just to make it a little bit real. So, lending, I think, is a use case that's pretty topical at the moment. Identifying the origination of the loan or the incentive for the loan. Also looking potentially at new markets, so using CDR data to get access to customers or to segment those customers in more interesting ways that might get them through the affordability process in a way that traditional pricing risk engines would do. But there's a bunch of things you need in order to do that. So how do you direct consumers to the offer? How do you go through that origination process, collect the data through that in an efficient way? How do you decide and route customers in that process? And then how do you sort of nudge them? Because a lot of, particularly the banking products require, they're long-running processes to go from beginning to end. So how do you nudge and stop the loss through the pipeline? So there's a number of capabilities that you need, not just to consume the data and all the things that Andy was talking about, but actually beyond that to then generate revenue off the back of that. I'm going to move on. So we have a mentee. So if you want to drop into your phones and just type mentee.com, and then there's a code at the bottom of the screen. If you just tap in 474-15038, very memorable little number. So I mentioned a few different use cases, talked through some of the concepts. I'm sure you guys have got some interesting ideas, probably a subset of them you'd be interested in sharing. So feel free to tap away, and hopefully we'll see what we get in a couple of moments. Whilst you're doing that, I'll just talk to that second use case, which was action initiation based on. So whereby you can target customers based on their account behavior, which through the CDR data, which will then target you directly into the site, personalize that offer, personalize the messaging specific to you, connect to others in the ecosystem, present up that offer, and then ultimately transact. So I'm looking at a blank screen. I'm not sure if there's a really interesting email doing the rounds or not. So maybe I'll keep that one going and I'll move on. But feel free to tap away and it'll appear behind me. So there's a range of use cases, right? So beyond the base transacting of CDR, therefore there's a whole range of capabilities that you need underneath that. So purely for CDR, if you're a bank, you've got to get a load of data from your legacy systems, and you've got to host and manage it. Yeah. And then if you're, there we go. They're coming up, Andy. That's good. And then you need to manage that process of doing the consent. So this is where people are looking right now. So if you're a bank, you're mandated to do it. If you're a data recipient, you're pulling back and retrieving that data and building the use cases. So that's a chunk of capabilities to enable the use cases. But for the ones that I've just talked about, there's a range of other ones, and I've no idea what's going on behind me. So it's
working.
We'll come to that. So some of those use cases need a whole range of other capabilities. So to look at the events, to get customer insights, to experiment, because this is typically net new. There's a whole management of the events that are flowing across that. How do you optimize, prioritize all of those data, detect the events, and then ultimately route the customers? And how do you build the journey that where any one part of the ecosystem is a component? And so you have this distributed journey. And then there's wider challenges. So if you take this ecosystem, how do you make it specific for each industry? So for banking, there's payments specifically. So how do you connect to MPP or to somebody that does? If you're in energy, and whilst we don't quite know where that will land, but assuming AEMO is part of that, how do you connect specifically to them and operate in that? And then ultimately, how do you monetize some of those interactions? So if you're operating a particular part of, so if you're operating sort of an API basis, transaction basis, how are you going to charge that? Who are you going to charge? How are you going to move it around? Which needs that monetization capability as well. So before we move on, I don't know, Andy, if you have a observation on the killer use cases?
Well, I mean, the bigger text means more than one response. So insurance and aggregation jumping out. There's lots of different worded case studies around personalization. So it's quite interesting. But I think what does jump out is there's a lot of different ideas there, and that's kind of, I guess, the challenge and the opportunity. There's so much that you could do in open banking with consumer data, especially when you start looking cross-industry, which I think is quite exciting. All right, so can we go to the next mentee? So if we just click on a screen on mentee, please. Right, so based on what Mike just talked about in terms of our view of some of the capabilities that are required, thinking back to the use cases you just thought about, what capability do you think an organization, whether that's a bank or a fintech, would need in order to power the use case that you put up? So if you could put something in for that, please, and we'll see what we get back.
I'm not a singer. I feel like I should be singing right now, or lift music, perhaps. Maybe we'll keep that one going. Let's gaze into the crystal ball, right? So, and in doing so, let's take a quick detour to the UK, and I'll do this quickly because I think it's been a topic of conversation beyond that. So, UK now. So 3 million active monthly users. Interestingly, and Andy talked about this, 1.2 banking payments and growing, most significant growing area. Core volume, API volume, so 2018, about 66 million, through to now 700 million is a recent number. And you can see the trajectory. It's not quite a hockey stick, but there's definitely steady and ongoing growth. Interestingly, just a little data geek thing, you'll notice there's a little lump. That is when they banned screen scraping in the UK. So there's a little bump of take-up, but not a dramatic bump, but interesting nonetheless. And that in turn continues to drive growth. And then, obviously, there's 300 entities as part of that. Interestingly, those entities often support other organizations sort of sat behind them. TrueLayer yesterday is an example with tens and hundreds, and there's 5 or 6 that have that sort of ratio, so somewhat underrepresents the number of organizations that are actually connecting. And then the use cases, quite a lot of money management, quite a lot of lending and credit, which I suspect is why we're seeing that as being an interesting use case. The thing that nobody tells you is it's actually not the consumer that's driving the growth now, it's the SME that's driving the growth. So top tip, do something with SMEs, and if that's part of your growth business model, then that's something to be looking for now. So zoom forward with a bit of those learnings. We're kind of in this startup phase, and Andy's talked to this. So foundations are there. We've got the technology. We've been through the process. We've got the 4 majors in. We'll have the rest of the banking industry, regulated industry going in. But there's still more work to do. There's still work going on the standards. There's still challenges around data quality. There's still implementation. Going to sort of where's in the midterm. So there will be an adoption phase. If you look at the UK, there was a long strand. Some of that length was driven by things that we've managed to avoid in Australia, so I think that will be much shorter. And then there's a sort of change in trajectory. That's in the scale-up phase, which is where we'll head to. So more ADRs, more test and learn of propositions out in the industry, much more import and export of ideas and organizations into and out. And then embedded finance, action initiation. So as that comes through, that will clearly going to get embedded into it. And then obviously other industries come in as well. Interestingly, I think dominant players will then rise. And to take a slightly more provocative future state, where do you go beyond that? And we don't have a disclaimer, but if there was a disclaimer, it would look something like value of investments could go up or down, like beyond could be right or wrong. But interesting to think about it. Will there be big winners or big losers in the future? Will it go the way of the Chinese fintechs, where there's consolidation, killer use cases, mass use of data, obviously overlaid with consent and privacy? Will that all be managed beautifully well by 2 or 3 players? Will that be people in this room? Will it be banks? Will it be telcos? Will it be the big tech organizations? And will just a few people rise to the top? Will it be the Amazon effect of the consumer data right? Which then goes full cycle to who's in control in those situations, because is it really the consumer, or is it really those organizations that win? So thank you all for your time. It's fantastic to be here. I think we probably have time for a question, perhaps?
Absolutely, sneak one in.
If there's a...
Assuming our enthusiastic audience is brimming with questions. Like what's for lunch? Is that them? Oh, we got one. Good.
Thanks. So I see the uplift in terms of usage when screen scraping was banned in the UK. Were there any downsides of that? Less capabilities or functionality for innovation that the industry saw? Because that's what we hear a lot in some of Australian kind of folks that use screen scraping, is that open banking isn't quite there, doesn't have the same level of capabilities, that sometimes there's a need still to do screen scraping, certainly at the long tail, but other use cases as well.
It's a hot topic, that one, isn't it? It will be driven by value, cost, and quality of data and service. I think it will be market driven. I've yet to hear that whilst there's a desire to go towards CDR for the security and privacy and consent that's embedded in it, and that's seen as being a positive thing and not having to share credentials. There is no formal cut-off date for screen scraping. So I think either there's an opportunity to get that functionality, or for a provider to get that into CDR, and to sort of raise the bar and offer equivalent services, in which case I think there's a lot of merit doing that. All organizations and the regulator is about driving and resolving issues that are in CDR. So I think there's sort of a virtuous cycle. So I would see it as a steady trend. would be my sense.
Any more, or just what's for lunch? Can you please put your hands together? Thank Mike and Andy from EY for that fascinating presentation. Thanks to K&L